Yo, what's happening, legends? Thank you guys so much for joining me here today. We got a massive show planned for you today. Of course, we do have the FOMC. The market has been extremely volatile this week. When we came back on Monday, things started to look a little bit exciting, and then we come back, a couple of days later, 2 days later, going into this FOMC. We're seeing substantial corrections over the rest of the market. Obviously, world token down 20%. Near token, which had a little bit of an exciting last couple of weeks, is also down 16%. Things like COTI are starting to move on the daily time frame. It seems as if the market just trying to wait and see if we do get a surprise in the FOMC, or if it's just the run-of-the-mills unchanged approach that the market is clearly expecting, guys. Obviously, if you have been paying attention, if you haven't been living under a crypto rock, this is a big factor in conversation. Now, last time we had the CPI, we had the PCE, and those actually beat expectation, which created a lot of relief and volatility in the market towards the upside. I don't necessarily think this time is going to be a similar factor. However, it does indicate that we are in extremely uncertain conditions, given the tariffs, given the war in Iran and everything of that nature, that it's not too much to expect in terms of how that could affect the FOMC fund rate. And then obviously post that, you have the press conference, which we won't be here for, but that's effectively where you try to get a little gauge on what we can expect for the rest of the year. For the most part, I don't think anything too exciting is going to come out from that front. But all in all, guys, we have a lot to talk about today. If this is your first time joining us, make sure that you smash the like button. Make sure that you subscribe to the channel. We're a very small, humble community, but we're growing steady, and we are going to be massive. I promise you that. And we are going to try and make every single one of the early community members and the later community members profitable, guys. I'm working on so much shit for you guys. I'm working on strategy testers here, trying to build indicators and stuff that I can actually share with you guys. I've built an amazing range indicator, and kind of tying in my strategy just to automatically give you guys trades, 24/7, whatever the period is. Especially since I do have the business running, it's kind of difficult to balance both factors out. So I think if I can recreate my strategy into this, I can actually really find a lot of success. And so far, I'm happy to say that some of these outcomes are actually seeing like 60% win rates, which is quite substantial for an automated trading executor over a year period, right? So I've been doing bot trading for a little bit now. I have a couple personal bots, but they only take trades every so few days or so few weeks, whatever the case may be. So this one here is a little bit different because we're trying to get multiple intraday trades going so that you guys have something to go through 24 hours a day. It's a little bit difficult to get super accurate, and I would never ever put something live unless I felt comfortable behind it and I could back it with whatever reputation Charts.com has. But I am going to launch this thing for you guys and hopefully create an environment specifically on higher liquidity pairs where you guys don't really have to, you can really just learn from the indicator and really don't have to rely too much, on your emotional bias towards market. Many people have said this in the past. I found success in my own bots that I obviously won't share because that's effectively an edge and something that's exciting. That's private, because once I share that, then it's obviously gone. But yeah, effectively, I'm working out how to create something new for you guys that I can actually send to you. And we do it with small capital and try grow up an account. To get access, you will have to be subscribed, right? You will have to be part of the Charts.com community. I'm building so much, guys. You don't even understand. I'm building a journal for you guys that will come out in a year from now. We have so much shit going on. I will slowly grind up in terms of the content side of things. That's never really been my specialty. We're going to get into it, and we're going to build some more profitable traders. I think what we'll do this weekend is we'll try sneak in a multi-hour live trading stream with you guys over the weekend. Just kind of do like a 2-3 hour trading session, just kind of hone in, teach you guys as much as I can in that period, and we'll try and make it a recurring thing if that sounds good to you guys. What's up, Joanne? What's up, Never Forever? Free Will, Anubis, Cryptog says he made it. FOMC is going to be interesting. It definitely is. Joanne Woods in the house, of course, and easy vending. Hopefully we can find something to trade. On our last stream we did, I gave you guys 2 trading opportunities, which both played out pretty awesomely. We had the Hyperliquid one, which we'll do an update today. Gave you the guys trade live on stream. That went down 8.5%, which was a short position we took. And then obviously just preparing for this bearish outcome that we will inevitably see over the next couple of days. It's been a little bit of a back and forth in the market, right? We saw a lot of excitement as I said in the beginning of the show, post the surprise in the CPI, post the surprise in the PCE data, now coming into more of your FOMC. As I said, the market kind of prices these things in before, but given the surprises on that factor, I think it's a very interesting environment. It's an interesting macro environment in the market. I'm not expecting any changes, but I'm also not expecting, if that makes any sense. So today's show is about preparing for those two eventual outcomes. I'll talk to you guys about the price action. Spoiler alert, things do look a little bit bearish right now. Of course, we're going to talk about Ethereum and that setup, which is still a valid trade. And then obviously what we're seeing on Bitcoin at the same time. Yeah. Cool. Guys, Bitcoin, very, very standard, right? A slow upward rising wedge. We had a slight deviation above trend, retesting back into that critical level of resistance. We didn't see a lot of buy pressure going into that, and thereafter saw a bit of a rejection, right? The market was getting bullish. The market is still pricing, or at least retail is still going, okay, well, what if this is the bottom formation? Guys, if you are buying crypto right now at the boatload or at a high percentage factor, you are making a huge mistake. Okay. And I don't say that lightly. You need to understand this from the different point of views. What we know for an absolute fact is based on where the market topped, the 4-year cycle is well in play. To avoid that whole factor, regardless of how smart you are, as you think you are as an investor or as a trader, to avoid that entire factor and go, okay, cool, well, maybe if the 4-year cycle topped to the day, maybe we won't bottom after 365 days. You're taking a very, very simple analysis and something that has historically been extremely accurate, and you're avoiding it because you're hoping you get in as close to the bottom as you possibly can. I don't necessarily think buying Bitcoin at $64,000 and whatever other asset like Solana at 70 or whatever is a terrible trade. But I think that if you're going in and you're making some pretty rash decisions in terms of your portfolio and your percentage invested, I think it's a big, big mistake, because things are, they can get a lot more hairy than what we're currently seeing, right? Specifically going into this Q3, Q4 part of the market, it can become a lot more dangerous in that final move in the market. And for me, guys, obviously, until proven otherwise, we're still looking at that 50K zone. We're looking at that sub 50 to 40 to 30, even as low as 30K. As the market progresses, as time goes on, of course, this being the big major support before really no support until 40 in terms of real relative strength, we're just seeing a consolidation at this place, right? This is where your ETF news started coming out. We knew it was going to get approved, and boom, this is obviously the Donald Trump rally as well, if I'm not mistaken, going into these regions over here. This is where Donald Trump was approved. Then you had your ETFs and stuff over there. So that's the election cycle. Boom, exciting, whatnot. And now coming back into that, it makes sense for the market to consolidate at this. But if you're looking for any signs of recovery, you need to see a more aggressive accumulation, a more aggressive reaction from these zones. And what we're seeing is far from it, right? We're really not seeing any volatility around the area on a relative scale. We're really just seeing Bitcoin consolidate and potentially get ready for that next move down, which would take us down to that $40,000 region, which I still think is very, very, very likely. Lower time frame, obviously, where we need to be spending a lot more time. What we're looking at on Bitcoin here, very simply, is lower time frame, rising wedge, rejection from the upside here, looking to make that second trip back down to the range low of about $59,000. Lower time frame, what I'm seeing here is a massive fair value gap that was printed on the 28th of July. This was just after our show. We've now filled out that fair value gap zone. We do have a few levels of liquidity towards the upside here, which I'll clean up for you guys. That's obviously where the fair value gap is now filled, where we're seeing that rejection, very similar to the price action before. Bitcoin seeing a lot of volumetric candles towards the downside, tying in that volume indicator. We can see how much sell pressure is behind these down trips relative to the recovery right there, because you can see in that formation right there, the recovery is extremely, extremely small, and this is aggregated across like 6 exchanges. So it's not just Hyperliquid's volume that I'm using. It's an aggregated volume calculation, and it's clear as day that with the downtrend here, we're seeing that growth in volume, which, as you guys know, is a sign of strong momentum towards the downside. Then we're recovering, filling out a few of these fair value gaps and these inefficiencies in price, as you guys can see in this example. And it does look as if Bitcoin is gearing up for that next move down. We've obviously seen a little bit of a fake out of the trend with a little bit of buy pressure kicking back up. But all in all, this is your validation point right there. It's a little bit of a support, a build-up of liquidity on a diagonal scale. And if we do see that break of structure right there, we could easily see over the short term Bitcoin retracing back into $61,000 zone. If you're looking for that short position here, I'm not personally trading Bitcoin. I'm more placing my bets in the Solana realm and the Ethereum realm, just due to that volatility. And of course, on the Hyperliquid front, which we'll go over as well. But for Bitcoin as well, relatively small positioning from this point on here. And then you're looking for that break of structure to start compounding on that trade. Stop loss initially goes above this previous liquidity high right there, which is just where that structure will change towards the upside. Little deviation formation, rejection, retest from that point, push down into trend. If we do see something like that, right, a little break back above that structure, that would obviously invalidate that by creating that new high in terms of price action. And coming back down here, breaking below this section here would increase the position sizing to drag that price down a little bit further into this lower 61.5 zone. That would be my target for Bitcoin on the shorter time frame for you leverage traders and you day traders. Higher time frame, obviously looking at the range low here of just below $60,000 at this zone right here. Okay, Bitcoin's price action, very, very simple. Range high at the top side here, range low on the downside. And basically what you have within the zone is just a full build up. Why is it not doing this now? This indicator is broken. Okay, there you go. It's just a full build up of this volume and this liquidity in that center zone right there. That's kind of where Bitcoin's playing around at that volume point of control right now, which makes sense. But a break into either direction, given the lower amounts of liquidity on the underside here, I think that we do kind of fill out these zones here of about $59,000 at a higher time frame bias. Ethereum USDC. This was obviously one that we are prepping that short on. Ethereum has had a very, very slow, similar price action structure, but a relatively stronger performer in the market. Ethereum obviously on the higher time frame now. I'll show you guys on the weekly, on the daily time frame. This was our support structure here. We broke that with an inefficiency volumetric candle. Okay, when we do get a structural break like that, which is a massive volumetric candle, it creates a massive structural inefficiency, right? A gap in price. And I do think, obviously, with this performance going in here, given the strength of this region in general, it makes sense that Ethereum sees a little bit of recovery from the zone. Of course, it's a major multi-cycle long level of support. And now, obviously, seeing that retracement, a perfect 50% retracement after breaking the previous low, shifting that structure, retracing into the inefficiency, and now seemingly rejecting on a weekly time frame for sure. Potentially even about to form we'll see how the engulfing structure forms over the next couple of days going into weekly close, but definitely a formation worth paying attention to. As long as the weekly is holding below 1952, I think that trade is valid for Ethereum to drag back down to the $1,500 zone, which is a sizable 22% pullback. And from a risk to reward perspective, I think pretty much up there. We do have these gaps on the weekly time frame slightly higher, but breaking back above that zone does flip the narrative a little bit as well, which is why I'm happy to take that risk towards the downside, right? Effectively, what we're looking at is two scenarios here where this rejection continues and we drive Ethereum back to this range low, short-term trade, quick take profit in that regard, maybe a month-long trade, so not very short-term. And in the inverse, we lose that trade and then come back in and reclaim this level and then obviously take a shit ton bigger trade towards the upside there, covering a vast majority of those losses and then going pretty deep. Covering all the losses and then potentially going quite strongly, you decide, back into that profit realm and pushing towards these upper liquidity levels here, filling out these fair value gaps on the weekly time frame, going into as high as 2.8. Right, so we're risking a solid 5%, and if we're in the inverse here, we could have potential to start looking for that 40% upside target on reclaim of the level, which historically has been a solid thing from Ethereum. We've seen the last cycle, rejection, came back, reclaimed on the weekly, and obviously in that example went up 110%, not something I'm expecting, but that's a very, very strong bullish confirmation. Strong double bottom formation on the lower time frame here, reclaim, swept the liquidity, deviation play, and then we can look for a massive potential upside there. Up next, I want to talk to you guys about Hype USDC. Hyperliquid is your hedge against what the market's currently doing. A strong level of support here, higher time frame level of support. As you guys know, this was Hyperliquid looks heavy. It was a tweet I posted about 2 days ago. And boom, 9.8% down on that trade. Immediately during the show, just started dropping, which was amazing to see. And I hope you guys made money. A few people did message me and comment actually on that post that they made some money, which is awesome. But now we're coming into the higher time frame level of support where we can definitely expect a little bit of relief as far as Hyperliquid goes. If you are in the bullish camp and you feel like the market's going to see more upside, you're paying attention to FOMC data, which should come out in a few hours from now. You want to be paying attention to Hyperliquid because that's the opportunity in the market. Hyperliquid's a very, very strong relative performer and really the one to pay attention to in an environment that the market does start to relieve. We have Ethereum going into a major level of resistance, the same thing for Solana and the same thing for Bitcoin. But where you're looking at it from a risk to reward perspective, Hyperliquid has also started to form these massive liquidity gaps on the upside here, right? We do see a slowdown in volume towards the downside here. We didn't see a lot of uptrend towards the upside. That's why we actually took that short position. But the sell pressure does start to dissipate a little bit here. And we're seeing this little consolidation, this little accumulation at the range low of about $54.5. I think that Hyperliquid on the inverse of the rest of the market and kind of as a hedge position towards Bitcoin does look like a pretty easy trade going up into these higher regions. You have about $59 recovery. Okay. So that's Hyperliquid there. Very, very simple. This was our target since this level at this point right there. Boom. Solid 19, 20% correction. Hyperliquid from the highs also down 31%. As I said, very, very strong relative performer. If you can hold this on and the rest of the market does show a little bit of strength from a risk to reward perspective, I think Hyperliquid does sit at the top of that conversation in terms of long positions. On the inverse of that, obviously you're looking at this next major order block region here, that sideways accumulation zone on the 4-hour time frame there. That would be my next target for Hyperliquid. And they were simply just trading that liquidity gap between those two zones, which is effectively what you have over here, right? On the daily time frame, an extremely volatile area for Hyperliquid between the $54 region and the $50 region, which is about a 10% gap. We never really found any support within those zones. So that's a very, very quick, swiftly moving trade potential right there. On the inverse, close below about $54, I think we'll quickly see that trek towards, $48, $49. Would you not consider $50 for a long on Hyperliquid? You could. That would be the filling of that. There obviously, as you guys know, there's also an inefficiency candle right there, a major volumetric fair value gap in the market. For sure, an opportunity to look for any longs here. I just think that there's a lot of damaging on the higher time frame risk over here, given these little consolidation areas here, these previous ranges. I think that there's a good chance that we do see that start to be retested first. And just from a risk to reward, that's a 10% drag into that for that potential liquidity grab. Sol USDC. Sol looks okay, right? Higher time frame, it's just been consolidating. Solana is effectively waiting for a little bit of reaction from Bitcoin or whatever. It's been trading between that $70 and $80 zone. We know that it's within this very, very dangerous liquidity gap of $80 to $40. So we got to be very, very careful with Solana because that is an extremely dangerous place to start buying. Although theoretically a lot cheaper than Solana has been, I think given the recent performance of Solana and what we're expecting, I just don't see that as the good risk to reward trade right now. I think you're looking at a potential 50% down flush over a small period of time, a couple of weeks, that really could happen very quickly, and losing that capital just doesn't really seem worth it to me. I'd like to see the reclaim of the $80 zone, and how Solana is trading right now is it's extremely indecisive. We've seen the weekly formation with 3 doji candles formed in a row, or 3 consecutive doji candle formations. Doji, guys, for those of you guys who don't know, is high wick, low wick. Sorry, high wicks towards both directions in a small body. That effectively describes indecision. It shows the market's inability or a lack of confirmation, right? That's the effective formation of a doji. When we see that on a higher time frame, we can kind of assess from that nature that Solana is kind of playing that waiting game. There's no narrative driving Solana up. And there's no narrative driving it down right now. It's in an extremely dangerous position. If Bitcoin does start to see that move, let's say we do get, as Brian Armstrong or someone said today, that they're expecting a potential, news on the Clarity Act as soon as Monday next week. They've said this a few times, so I'm taking it with a grain of salt. but they've said these things. If that were to happen, that would be a confirmation for Solana. I just think for me right now, from a risk to reward perspective, longing into that zone is very, very dangerous. From a price action perspective on the 4-hour, for those of you guys who are positioned for this, Solana is showing a little bit of weakness, right? That momentum is drying out. We saw V-shaped recoveries or aggressive moves previously retesting back into 74. This is where we use pure price action to really determine price structure, right? Price action being really the only truth as far as markets go. First retest back into $74, saw a nice high of about 79, came back in another fast move, slightly slower, slightly more elongated move towards that, didn't quite crack that previous high, came back again, and also not able to break that previous high, coming back into that same horizontal support. On the fourth attempt here, we're not seeing any buy pressure whatsoever for Solana at these zones. I do think that that is more indicative of the buy pressure and the demand behind Solana right now. And we could easily see that flush down towards that $67, $68 zone within the next couple of days for Solana. So I think very, very dangerous positioning right now. I wouldn't short it. Obviously, that's into a support zone, which is a critical mistake in any trader's journey. But definitely worth paying attention to for the inverse of that reclaim of $80 is a very, very strong confirmation for Solana on a weekly time frame. We can easily drive that price up into that 120 zone over the next couple of months, right? Then we could definitely look at Solana as a potential bottom in the market. Bear in mind, when we're looking at bottoms in the market, Bitcoin is the thing that follows the 4-year cycle, right? In many times, Bitcoin bottomed after a lot of these other assets, right? So it doesn't necessarily associate with all things. For the most part, crypto is and altcoins are, or Bitcoin is a proxy for that. They're effectively a leverage play on Bitcoin, but the 4-year cycle is very, very directed at Bitcoin for the most part, right? Obviously, there's a lot that follows. Obviously, there's a lot that bottoms after Bitcoin, given that Bitcoin dominance at that point in time. But that is where we kind of associate that 4-year cycle with as far as Bitcoin goes. Solana could potentially have bottomed already. I think a strong reclaim of $80 does invalidate that liquidity gap for the first time. And then we could start to look at some more upside. I just don't think it's any reason I would long that. I would long Solana from this region or buy Solana from 120. I just think from a cycle to cycle perspective, I think Solana's seen the peak of its excitement, right? I think that Solana has a very long, drawn out next couple of years that, you know, kind of ranges between the levels. I think that the risk of 60% down, 70% down doesn't really validate the potential upside of 100% that I see left in Solana for another cycle or whatever, right? As you guys know, with the token unlocks, the valuation does consistently go up and has gone up cycle to cycle. But from that price action perspective, there's not really a lot of demand. And the reason why Solana was so exciting in the previous cycle was purely based around the meme coin cycle. I just don't think that's a sustainable narrative, as we've already seen clearly in markets. Guys, thank you so much for joining me here today. I will be live on Friday again. Shows on Monday, Wednesday, Friday. They're going to become a lot more engaging in terms of live trading and everything of that nature. For now, we're looking at Ethereum and Bitcoin as the two potential short positions. Hyperliquid as the long position if the market does flip towards the upside. Someone says, can I take a look at Zcash? I'll do a quick look at Zcash. Hyperliquid, obviously that inverse trade, if you're too concerned about getting too much risk towards the downside, effectively being too short. But yeah, Zcash, interesting one. Definitely an order block in the current range that we're playing in right here. We've seen that structural break of a year. As you guys can see, that was the previous high. We then broke that level after the continuous downtrend here. It kind of makes sense as a retracement point here. I'm sure we'd find a volume profile here as well if we drew it from range low to range high. Perfect retest of the volume profile after breaking that structure. Also looks as we'll probably see a 50% retracement here. Let's see if we can tie it in. I would edge this, yeah, 618% retracement. Not bad. I like it. I think it's good. I like that structural break, return to the volume point of control. I think that Zcash also sits in that place of more bullish on the 4-hour time frame, right? I don't think I would short this. I think that you're trading on a bit of a mid-range zone here in the first place. So your short positions are from the upper range of a year, and the long positions are from the down range of a year. From a risk to reward perspective, you're more looking at potential upside on this. If, of course, we see that breakdown of Bitcoin, Zcash should follow suit and move towards the downside. So you will be right. But in that case, what you're doing is you're actually taking a bit more of focus on Bitcoin and Ethereum's price action, and then using Zcash as a leverage play on what that price action is. As far as I can tell from this perspective, Zcash looks a little bit more bullish, right? We have the downtrend there from the high coming back in now, breaking that structure, returning to a point of control. It seems like a really, really good opportunity towards the upside if the market does flip bullish. Guys, thank you so much. Have an absolutely fantastic evening, and I will catch you guys again on Friday. Much love, legends, and then we'll do another weekend stream, and hopefully I can get somewhere with this indicator, guys. I've built quite a few awesome detection methods here. I won't spoil too much. We have our backtest lab here, which allows us to basically run full sweeps and actually analyze what the best performing return is right here. So yeah, I'll teach you guys all about this a little bit later, and hopefully we can release something pretty soon. Much love, guys. Stay safe, trade safe, and I'll catch you all on the next one.